liquidity. Until market has swept the liquidity, do not oppose that direction. So since you had an initial uptrend and market gave you a structure to the downside, it means that we're now officially bearish. Gave you inducement and came to trigger this break and block. It means that we're now bearish. Now to know where your take profit level will be, you look for what? Draw on liquidity. Now the draw on liquidity that we can see here easily is what? Trend line liquidity. And market needs to what? Clear that draw on liquidity. So since the market has not yet cleared that draw on liquidity, do not start looking for trades to reverse the direction of the market until market successfully clears this trend line liquidity here. That was why if you're taking any kind of sells here for a long term, market will eventually take you out because market has not yet successfully cleared the liquidity pool and you are trying to reverse the market there. That was why most people were buying. I kept selling because what I understood the different concepts of liquidity. And as I knew that yes, market is making trend line liquidity here. It is not proper. Since market has already started reversing and giving me my strategy that I trade for reversals, it's not proper to start looking for buys when market has not cleared the liquidity on the downside here. It's only when market clear that liquidity that you can now start looking for ways to reverse the market back to the upside. So now the pattern that market was exhibiting on the charts before coming to trigger your point of interest or any sort of reversal started happening in the market, it will tell you where you will keep your take profit level. Now, it was only after market actually cleared this trend line liquidity that market now triggered the zone for reversal here. And pay attention, when I had a buy, a long-term buy from this zone. My long-term buy actually was from here. Okay. My long-term buy was from, I'm trying to, well, maybe I want to say, but my this was my long-term buy from this 4 hours breaker. Now pay attention, my long-term buy covered this entire zone, and you will know why it's covered that zone. Because if you pay attention here on the 1 hour time frame, you can see markets making a series of what? Lower highs, lower lows. You see lower, this is it, lower highs, lower lows. Sorry. Lower highs, lower lows, lower highs, lower lows, lower highs, lower. So this is what? Lower highs. This is what? Trend line liquidity here. Trend line liquidity. Now, in fact, if market approaches a point of interest in a trend line manner, it gives me more conviction that that zone is going to hold or that a possible reversal is going to happen. Why? Because liquidity means money. It means where market left money that it needs to go and grab or what take out. So since market is approaching any zone with trend line liquidity, it's giving me more insight that that zone is actually going to hold more. If market approaches my breaker with a trend line liquidity, I'm more convinced to hold that trade. While it approaches this zone with trend line liquidity, I'm also more convinced to hold this trade. While it approaches this zone with trend line liquidity, I'm also convinced to hold this trade because it means that there are zones on the upside here that market needs to what? Clear. There's money laying on the upside of this chart that market needs to go and grab. So paying attention to how market approaches the point of interest will tell you the direction of the market. So knowing that market was making a series of lower highs and lower lows here, and market eventually gave me this strategy to the upside by taking out the last high, it means that I'm convinced that market is now reversing. As this market is reversing, my take profit level is what targeted to clearing this trend line liquidity. That was one of the reasons I was convinced on taking buys for the long term. That was why every opportunity I saw, I kept looking for buys because this trend line liquidity here has not yet been cleared. But I think eventually the market has done that by getting to this level here. So market cleared this trend line liquidity. This is where market currently is now. And what the market eventually do to clear that trend line liquidity. You guys following me up? Please pay attention. You guys following me up? Someone said it's lost. It's understandable. This topic is just, you have to backtest and understand well. Do you understand? That's why I said questions for this class will be on the next class. So if you're not understanding, you don't feel bad. You watch the recording and you get back in place. So now, the pattern that market sees to approach your point of interest is very crucial. Observe the pattern that market is making before your point of interest gets triggered. It will tell you where your take profit level will be. And for trend line liquidity, it actually shows up, I would say, 80% of the time on the charts. If market starts trying to trigger a point of interest, I'm sure that if that point of interest is actually legit, you will actually see some kind of trend line manner there. See, the first time trend line liquidity will tell you where your take profit level will be. will be up here to create this trend line liquidity. Even the second trade I took here, even if I wanted, I would have stretched my take profit level here because this trend line liquidity here has not been taken out. But I decided to go with the immediate one I can see, which is also this trend line liquidity here. This one here is also what trend line liquidity. So all the trades I've taken were aimed at what clearing some sort of liquidity, and majority of the time it's what trend line liquidity. Even the sell is for the sell also trend line liquidity for this downside here. In fact, when market started buying to the upside here, there's also what trend line liquidity here. And what the market do eventually when it started reversing, it reversed until that trend line liquidity here got taken out. It was only after market did this that sales now started happening. So before you can start looking for any trades to oppose the market, make sure that you're not trading a POI that's inside a liquidity zone. Like these other blocks inside here, this other block here, this breaker block here, they are all inside this trend line liquidity, and market has already started reversing. Do not look for any kind of reversals to the upside from these POIs here until market has swept this trend line liquidity, and they will now look for another POI that is not inside that trend line liquidity. Same thing as this is what trend line liquidity. All the other blocks here did not sell the market until market cleared that trend line liquidity. They look for another POI that is not inside the trend line liquidity. So do not look for trades to reverse. Do not look for trades to reverse market direction while the liquidity type that is there has not yet been cleared. You guys following me? Can you guys also see my screen? Can you guys see my screen? Someone says it's not okay. My screen is visible. So so depends on the scenarios that you trade, you will see it majorly on the chart. In the scenarios that you trade, you will see it majorly on the chart. Here is something as this. This is what trend line liquidity, higher highs, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Then market gave that structure and then it was started selling, sold until what this trend line liquidity got swept. So the pattern that market uses to approach a point of interest is very crucial, and they will tell you. So if you're looking for a buy, for example, before market approached your buy POI, it was on the downtrend, making a series of lower highs and lower lows. I'm more convinced to take that buy because I know that it's liquidity on the upside that market needs to go and clear. So if market approaches my POI in a trend-like manner, I'm more likely going to be so convinced to take that trade because there's liquidity on the upside than when market approaches it impulsively, like I have a buy point of interest, and before market approached that buy point of interest, it was a huge sell that market used to sell to that zone. I'm going to be a bit more skeptical to take that trade than when market approaches that my POI in a trend-like manner. So the first type of liquidity that we have in the market, and one of the most common type of liquidity we have in the market is what trend line liquidity. Now, giving an example of how you can take your profit using that trend line liquidity. Now, second of all, the second type of liquidity that we have, not that common, I've not seen it since last year to this year, but it's also a type of liquidity. But it's not on the chart here because I've not literally seen it. I've not used it in 2 years now. But it's an example of a type of liquidity we have is what you call equal highs and equal lows liquidity. Now, equal highs and equal lows liquidity is what most traders call double top and double bottom. But this time around, I'm talking about when price makes a relative equal high or relative equal low, something like this. The markets, let's say something like this happens. Markets, let's say you have a downtrend, market does a structure shift, inducement, then goes up here, comes down, and then something like makes an equal high or something like that. Then starts pushing down. This is what an equal high is. When market makes a relative equal high, this previous high is going to be equal to the last one. The two candles there will on the same line, exactly the same line. That's what you call equal highs liquidity. Same as an equal lows liquidity, you can have something like this. And then market comes down and makes an equal low. It's going to be on the same level. Do you understand? This is what you call equal lows liquidity. And this is equal highs liquidity. Most people call it double top and double bottom. You get so that is what this means is what that there's liquidity being accumulated being on this upside here. Most people say this is a sign of reversal to the downside. Most people use this as a sign of reversal to the upside. But once this happens, this is what you call equal lows liquidity. And this is what you call equal high liquidity. What this means is that there's liquidity on the upside here and there's liquidity on the downside here. You guys following me up? You guys following me up? But don't worry about this. This actually has not shown up on the chart for 2 years. So like I'm just teaching it simply because nothing is wrong with with knowledge. So what it means is that when market does something like this, there's liquidity here, and market does something like this, there's also liquidity here. But what it means is that if you are bullish now, your analysis is giving you a bullish move. You have your buys in place, but you don't know where your take profit level should be. Do you understand? Because you're still skeptical, you don't know where your take profit should be, and you observed before markets started approaching this zone. Let's say this is your zone for a buy, and before market approaches zone for a buy, it gave you an equal high and equal high liquidity. What it means is that there's liquidity here in the market, and market is filled with liquidity. It means that wherever liquidity is in the market, price will want to drive there to clear that liquidity. Same as trendline liquidity, and now with equal highs and equal lows liquidity. So what it means is that eventually, if market should come and trigger this your point of interest, your take profit level should be aimed at clearing that equal highs liquidity, which means if you take your entry from where you're supposed to be, the take profit level is supposed to be aimed at clearing this liquidity. So either you keep your take profit level exactly at that equal high, or you just put it slightly above it. But markets will aim at going there to clear that equal highs liquidity. Like I said, I've not seen this on the chart for like 2 years, so I don't really know how to give the chart example here because I've not seen it on the charts for 2 years. I've only used it twice in 2023. Same thing as this. So this is where your take profit level will be to clear that equal highs liquidity. And same thing as this, when market makes an equal low, and then before, let's say you are bearish, and before price approaches your bearish POI, let's say your bearish POI is here, you are still skeptical of where you're to keep your take profit level, but you observed and saw that market gave you an equal low, a relative equal low. The lows have to be equal to understand. The market does something like that. It means that if you take your trade here, that's what your take profit level should be aimed at clearing that equal lows liquidity here. So that is where your take profit level will be to clear that equal lows liquidity on the market. Now, taking any trades to oppose that direction of the market when the liquidity has not yet been taken out is not advisable. For example, you're obviously going to see a breaker block here. So most people now may focus on taking sales from this breaker block, but you observe the pattern that there's an equal highs liquidity here that's not yet been taken out. It's not advisable to now start looking for trades to oppose it's bullish. It's not advisable to start selling from this zone because you saw a breaker there, because there's liquidity here on the upside of the chart that is yet to be taken out. Something as EVS, and then you also probably see another block here also. It is also not advisable to start selling from this other block where market has not yet swept that equal highs liquidity. Something as for the equal lows, once you're selling from there, provided that market has not swept that equal lows and taking it out, it's not advisable to start taking trades that will oppose direction of the market when that liquidity zone have not been taken out. Same with trendline liquidity, because you will see multiple other blocks here and here and here. Once you're already selling and market is bearish, it's not advisable to start taking trades to buy from any other blocks here in the market or here, provided that market has not yet swept that trendline liquidity. Same thing as this scenario also. This scenario, once you're selling the market, it's not advisable to start looking for other blocks here for a buy or here for a buy or here, provided that all of them are still enclosed inside this trend line liquidity. So you wait for the liquidity to be taken out first before you can now start looking for trades to reverse direction of the market. You guys following me up? So that is the second type of liquidity that we have in the market. I would say it's about 2% of the time. I've not seen it in 2 years, like I said, but it's still good to teach. Now, after that, the third type of liquidity that we use in the market, this one is common a bit. You can see it like 50% of the time on the charts, or 40, or say 50% or 40% of the time on the chart, is what you call ranging liquidity. Hang on, let me name these things. I'm sorry. So this first one I gave is trendline liquidity. This second one I gave is equal highs and equal lows liquidity. Then the third one is what you call ranging liquidity. Now, a range is basically market being in a fixed point of, I'm talking about technical analysis part for Forex, ranging from support to resistance, resistance to support, support to resistance, resistance to support, support to resistance, resistance to support. That is what a range is. Called you can also call it a consolidation. So now, but the thing with trading range is you have to know the direction of the market first. What I mean by this is, let's say market was bullish, so have making higher highs and higher lows. Eventually, market does something like a structure shift to the downside. After that, you will see your inducement. The market will now start the range. Will range from support to resistance, resistance to support, support to resistance, resistance to support, support to resistance, resistance to support, support to resistance, resistance to support. While it's doing this, it's accumulating what? Two sides of liquidity. Here is what you call buy side liquidity, and on the downside is what you call sell side liquidity. So up here, call this buy side liquidity. Then down here, you call sell side liquidity. Now, what it means is that there's basically liquidity on this upside here, and there's also liquidity on the downside here. But what market is going to do first is this zone where the POI is where market is going to go and sweep the liquidity first and trigger that POI. So now, since we are bearish because we got this structure shift, our POI for our sell is probably going to be here. So what market is going to do is what? Eventually go to the upside and then sweep the liquidity on the upside first, take it out, then trigger your POI. And what market is going to do next is, so it's from the buy side liquidity first. What market is going to do next is now go to what? And target to sweep the liquidity on the sell side here. So now the thing is, any POI now that is enclosed inside this range, do not try to use it as a reversal zone, because market will eventually sweep you and take you out and use you as liquidity. So for example, you may see another block here, don't use it as a buy. You may see a breaker here, don't use it as a buy until market eventually sweeps this range in liquidity and hits TP. Same thing as for the opposite side, which is let's say you have a buy zone, something like a structure shift to the upside, the market comes back, starts ranging support, resistance, resistance, support, support, resistance, resistance, support, support, resistance, resistance, support, support, resistance, resistance, support. Eventually, market is going to, so when it's doing this, on this upside, you have what you call buy side liquidity. Downside, you have what you call sell side liquidity. So here is what your buy side liquidity. Then down here is what your sell side liquidity. So what market is going to do is what? The zone where the point of interest is for the direction that you're trading is going to what? Eventually go and clear that zone first and sweep that liquidity and trigger your point of interest. Once this happens, where it's heading to next is what? To sweep the liquidity on the opposite, on the other side, which so is so the sell side liquidity first. It's now heading to what? Sweep the liquidity on the buy side, which means that once you sweep it and you take your trade here, your take profit level will be aimed at what's clearing the liquidity on this side. Now, any POI that you see up here that is still enclosed inside of this range, do not try to use that POI to take any trade that will reverse this direction of the market, because market will still eventually take you out. This side is so I have a trade NZD card had this. So this is a clear example of that range in liquidity. Market was gave us the structure to the downside here, inducement, then started ranging, buy side liquidity, sell side liquidity, buy side liquidity, sell side liquidity, buy side liquidity, sell side liquidity. But so it kept ranging. So this is what the buy side liquidity. And this is what your sell side liquidity. Now, what market is going to do is what this zone now, where the point of interest, because we're bearish and our point of interest is this other block on the 4-hour time frame. This is where we have our zone. Now, this zone that market is supposed to, where the point of interest is, market is going to head there first. sweep that liquid and trigger that point of interest. Now, where market is heading to next is now to clear the liquidity on the other side of the range, which means that the buy side liquidity got taken out first, and where market is heading to is to take out the liquidity on the sell side. Which is why when I took this trade from here, I did not bother taking my profit until market eventually would sweep this. Well, to be honest, CP is already almost hit here because this is what I'm targeting for the take profit level. So our market triggered this zone. No sign of reversal from any zones that will reverse this market completely until market sweeps that range in liquidity. So any other blocks, for example, another block here now, if you take a buy from here, market will take you out. Another block here, buy here, market will take you. There's no zone that's supposed to be looking for market to reverse this trade that's inside of this range that market is going to hold for long. So when we're looking for reversal zones until market clears this range, that's when market can actually start looking for possible reversals to the upside. So you guys following me up?